The Nigerian equities markets, which recorded its largest daily gain in more than 5 years yesterday, surging by 4.9% and taking the equity capitalization beyond the 15 trillion naira mark. Now, this also follows a 12-day rally that has also shifted the year-to-date returns from a negative position to the positive territory of 7.7%. Well, let's now talk to the head of portfolio asset management at Commercial Partners, Victor Aluyi, to get his reaction to all of this. Good morning, Victor. Thank you for joining us. Now, beyond the reduction of NPR by 100 basis points and the weaker average yield across the debt markets, what other factors have been driving interest in equities?
I think it's largely on the back of that, really, and I think the signal was strong from the committee. That's the Monetary Policy Committee, to basically, essentially posturing to the market that these low rates or these low yields are here to stay for a bit. So clearly, fund managers, portfolio managers, pension fund managers are, essentially looking to pick up better yield elsewhere. So clearly, if you look at, the dividend yield on some select names, you would see that you're getting a significantly better yield than what you're seeing even at the long end of the fixed income market at this time. So clearly, that has created a shift in sentiment towards equities, and that's the reason we've seen the kind of run-up that we have seen over the last 2 weeks. Market has added over 16% in about 2 weeks, and like you mentioned, market capitalization is over 15 trillion as we speak. Averagely, for a lot of the bellwether names, we have seen them notch up over 20% within this time period. I think the play here clearly is a strong dividend play, and it's essentially hinged on the fact that those yields from a dividend perspective are way more attractive than what you're getting within that fixed income market at this time.
Now, between the domestic and the foreign players, who are those who are taking advantage of the low valuations in the market now, considering that the stock exchange reported an increase in PFIs in August?
Well, so clearly you're seeing the locals still hold sway. As a matter of fact, what is happening with the foreign investors right now is that they are essentially just enjoying this rally as a way to move up their own books. Their own stance has been to find a way to get out of the market. Because again, if you look at it from a fundamental perspective, the macroeconomy still is significantly challenged. If you look at it from a regulatory standpoint, a lot of the sectors are still, quite challenged. So, the valuations, particularly from a dividend yield perspective, is what is driving this. And, a lot of the local investors are heavily in on this. And again, one of the strongest, drivers of this is the signal that, these low interest rates or these low yields are likely to remain for, a little while longer.
Well, the interest has been more on the bellwethers such as MTN, Airtel, Dangote Cement, and the Tier 1 banks. So how well do you see investors' sentiments rubbing off on other companies?
Well, I think that there is a likelihood that that happens. Again, when you have a rising tide, it tends to lift all boats, and that's what you're seeing right now. But again, I think that investors are likely to put on their cautious hats. Again, I think that once the valuations in terms of a dividend yield perspective start to look stretched, so as these prices rise and then the dividend yields are starting to look deep into single digits or not look so appealing anymore, that could put some sort of brakes on the sort of move that we have seen so far. Nevertheless, you're likely to see that spill to some of the less preferred or less favored names.
Well, Victor, with this traction in the equities markets, of course, we can't rule out the participation of offshore investors. But how does that speak to the impacts we've seen on currency pressures?
Well, so the currency situation remains a sticking point, if you will, particularly for foreign investors. With the kind of movement that we have seen today, if you compare that to the sort of, if you will, depreciation that they have witnessed on the currency side, they are probably still out of the money. So it's a big issue for them. It's one that is significantly concerning for them. And once we see moves, particularly from a policy standpoint, that seek to holistically address, that issue, it would certainly serve to attract even more foreign participation. Recall that, the birthing of the R&E window in 2007 2017, sorry, essentially heralded, a strong run that saw the market put up about a 42% return that year. So I think, reform and policy moves on that front will be critical to determining the sort of participation that the foreign investors have going forward.
Well, Victor, we all know that the exchange has other products such as ETFs and bonds. So how considerable are these instruments to investors?
Well, these are initiatives that the exchange has taken to even further deepen, its product offering. But suffice it to say that the level of trading, in terms of volume and activity generally, is certainly nowhere compared to what you have, for equities. For the fixed income market, still a lot of trades are still done using the CBN platform, to settle those trades. So clearly, I think that, going forward, traction for fixed income trades and also derivatives and ETFs through the Nigerian Stock Exchange will continue to grow. But for now, it's really on the little side, really.
Now, let's look at some of the regulatory policies. The exchange recently reduced charges of 5 naira per million on its fixed income securities after the expiration of a 4-year moratorium period. What do you make of that development?
Well, I think it's a case where the exchange is certainly seeing some more traction, particularly with that fixed income trading line, if you will. And, so I think that's what the exchange is seeing. And the idea, again, is to try and further drive that. One would expect that even with the traction, the sort of fees will sort of be kept at bay to encourage even further participation. But again, I'm quite sure that the exchange is looking to also take advantage of that increase. So again, like I mentioned, if you compare the percentage of activity in terms of the fixed income and also the equities, it's really a far cry still. But I think that fixed income level will continue to grow.
And in preparation for the introduction of derivatives, we see that the SEC has recently approved the licensing of central counterparties in the capital market, the FMDQ Clear and NG Clear. What, in your view, does that mean for the financial market?
I think it just further deepens the financial market. When you're looking to deepen the market, it is important that the necessary infrastructure is in place, not just for trades to happen, but for them to be able to settle amicably and smoothly, because settlement is just as important as the trading leg of things. So I think this is a step in the right direction. It will certainly serve to further deepen the capital market with these new product offerings, and it also offers a platform upon which further product innovation can sit in terms of settlement, in terms of movement across the platform. So I think it's a welcomed development.
Well, thank you, Head of Portfolio Asset Management at Commercial Partners, Victor Aluyi. Thanks for sharing some of your time with us this morning.
Thank you.